Good evening, Predicted Trades family. Let me just make sure. Yeah, looks like my mic and everything is working. Thanks for tuning in for a late Sunday night prep. Basically going to cover a couple of key topics as well as some key setups for the week that, I think we should keep an eye on. I'll have other setups for the week as we move into tomorrow, but there's some key things I just want to hit on a couple of names. Namely, Apple is where we're going to start. If you don't mark key levels, I highly suggest you start doing so. Key levels being all-time high and, other key levels that you find through your technical analysis. I know that some folks could use some help in this realm, so we will be putting out some instructional videos sooner or later, maybe even a whole class around how to find key levels. But let's see, we're looking at Apple and we're looking on a daily. So we've kind of got the whole year so far in view. You can see we topped out right after the first of the year, and we've just been downtrending, as we all know. One of the key things that we track in our system are moving averages. In my system, the white moving average is the daily 21, what we kind of refer to as the daily mean. Normally the blue or cyan line is the daily 8. For this instance, for these purposes, I'm actually going to just go with the 9 exponential moving average. So you got the 9 and the 21 in the blue and the white. Point being, when we are in a nice bullish market, we can push off of those, pulling them apart and creating a gap. And then we can pull back to them to find support before moving higher. You can say we're kind of in a bear market when we are below the daily 21 and we are rejecting and pushing lower. Once back above, it becomes support and we head higher. And this is a constant cycle in the market, right? Right now, obviously, we are well below the daily 21 and the daily 8. And each time that we've come back and peaked our head above those lines, we get sold right back off. The key reason I bring these up, we track these daily moving averages all the time on smaller time frames. And we just looked at a pattern where in a trending market, we bounce off of these moving averages, whether it's up or down. And we track that on the daily. Well, that pattern actually extends to every time frame if you go and look at it. So I'm going to leave this daily 21, or I'm going to leave this regular 21 and 8, and we're on the daily, and we're going to step through some time frames and see what we see. Also, you'll notice key levels. I usually have a number of key levels, but right here you'll notice I have new all-time high. I have a base or a zone that was a base that we kept trying to push off of to get back to all-time high. I had other zones in here, but I kind of just blanked them all out because we have gone through all of them and we've arrived at my next key zones. This zone, which if we zoom in, this 138 used to be a previous all-time high. I left it in yellow to let me know that used to be a previous all-time high. So we have gone so far this year, basically right here is where this used to be a high that we broke through, came back and held, and then took off soaring to new all-time highs. Now, in this sell-off market that we've been in this year, we've arrived right back at that zone We even, on Friday, dipped down to the previous zone that was support. These are big, key points in Apple's history where investors loaded up and they took profit and they loaded up. And then they took profit all the way back down to these jumping off points. This is kind of why we do technical analysis, to A, identify key points, B, identify trend, and when that trend changes, and also when it can change again when we arrive back at key levels. So we kind of got a gift on Friday in that we got back to a previous big level of support, and we gave that out enough to get down to the next one and then all the way back up. Some might call that a hammer. Some might call it a reversal candle. Time's going to tell, but we kind of just, well, at least big money, at least kind of proved that there's interest right here in this zone to take Apple higher. But again, maybe. We have to wait and see if they can hold this zone if we go back for a retest. But typically, when we give out support just to tag the next and close right back in, we should see a gap, we should see this zone hold, and we should see a move higher. Otherwise, we're already dealing with a little bit of a gap. Otherwise, we gap, we go through this zone, we reject it, and we go back to retest. So these levels this week are going to be very key on Apple. Apple's largest tech, very big weight. ES and Q, the S&P, the NASDAQ are going to move kind of along with and in tandem with Apple. And if you look, one key thing that we want to, the key point I wanted to make before we start jumping into smaller time frames. Let's jump over to ES real quick to look at what it did on Friday. On Friday, ES, started a decent day, ultimately dove through some key zones, set a new low of year, which everybody should go mark. Your new low of year. The previous day we tapped this zone, came back up. We went through that zone for a new low of year and right back up. And ES finished the day green on a doji at big key levels. This zone was built off of the low from last week, another important key level, and we came back to tap, slip, but close above, and now we're pushing off. So, key point, these can also be thought of as reversal candles, depending on how you do your technical analysis. There's a good chance for a move higher. But let's see what we get. Obviously, getting to this next zone is also going to be tapping the daily 8. But key point on Friday, ES, after a big down morning, fought all the way back and closed green. So, the main names we're going to look at and the setups that I think are interesting, it's going to be a very simple rule. ES closed green after a down day. What else closed green? Specifically in tech. If we look, Apple, Amazon, Facebook, Netflix. The rest of the board had a down day, stayed down, did not bounce back with the market. What bounced back with the market? Those green techs that make up FANG. What do you think they bought on Friday to take the market back up to a green day? Those key names. So that's going to be my focus for this week. It can be that simple. Did they load up on chips? Nah, chips bounced, but they did not get back green, and they fell a lot off their highs on Friday. So that's what we're going to pay attention to this week. That's simple. ES turned green, these names turned green. I'm probably not going to allocate risk anywhere else because big money showed interest. We've kind of set a double bottom in a way. We bounced last week, we came back, we slipped, but we closed above and we're pushing. And buyers are present in key names that lead the market. So, prep can get that easy this week. Now, let's get back to those key names. We talked about moving averages on the daily. Now, we're going to start stepping down. Let's look at how these moving averages interact on different time frames. I love the 4-hour time frame. The daily chart can obscure things, especially in toss. We'll talk more on that maybe another time, but it's a very simple thing to see. If we go from a daily chart where this trend line was, and we kind of ran into it on Friday. We go to a 4-hour, yeah, kind of the same. It looks okay. It's probably because I drew this on a 4-hour. Why? Do I pretty much know that? Because sometimes when you draw trend lines on a daily and then you jump down to smaller time frames, those trend lines jump all over the place. Weird things go on a daily chart, and you need to go down to a 4-hour or smaller to really draw trend lines properly. So, I love a 4-hour chart. When we start talking smaller time frames in a day, I have it right here in front of you guys during every prep, right? I've got a 30-minute, 1-hour, 2-hour, 4-hour daily. These are the main key time frames that I'm always going to be watching. So, if we look at this 4-hour since the year started and we hit our high of year, or all-time high, which there you go. Here's a perfect example of what I'm talking about on a daily versus a 4-hour when you have some aftermarket data. There's that all-time high on the daily during a cash session, which starts at open, ends at close, doesn't have overnight. Here's actually the overnight all-time high on Apple, and right there we have a zone. For when we get back, we now have a zone to test. Anyway, that's just a good example of how you get different information on a daily than when you step down smaller. If we look at this year, after setting those new highs, we dove below our moving averages, tried to get above them, back down. Once above, support, support. Once below, resistance, resistance. This happens repeatedly over and over. Our last good run, let's see, I believe this was the June sell-off stop. This was the invasion, Ukraine stop. This was the next low where on the market we pretty much held the Ukraine low. Apple slipped it a little, but once the market and everything got back above on that double bottom, we roared. And we held those moving averages up. Since then, rejection, rejection, with some slips above, but rejection, rejection. Point being, whoops. In just a 2-day period, we have gone from using, let's just call it the last week, and then we'll get back to the last 2 days. In the last week, we fought our way to and started to push off of them. On Wednesday, even before the market opened, We got a very big key right here on the downtrend that was coming. We slipped what should have been support to carry us higher. And we were watching the trend line from the lows. And as we were testing that trend line pre-market, we were also losing our moving averages, and then cash session, quick tap, back down. Even Friday, tried to get to it, back down, but right back at them at close, and now we'll be gapping into them most likely. So if you want to see examples of these things when they reverse, you can go back and see a tap, and in one day back up to and taking off. So we could be setting up for something like that, where we are gapping back up to, holding support, taking off through. It could be a turning point. Frankly, a gap up here and pushing pre-market will pull that 8 up to a point where they touch, and we'll get a good indication of, are we going to hold and head higher, or do we give out and start a down week? So, good gauge for tech, for the market, and everything on Apple is holding this zone and trying to get going again. It kind of sets a head and shoulders, right? Shoulder, little slip, an inverse head and shoulders, sorry. If we can hold and get going. So, key zone on Apple this week. Now, also, let's keep following this idea of moving averages and how we react to them down on time frame even further. I'm just going to jump to a 30-minute. And we can talk about the 2 hours. Nice, I love it. I have tons of reasons why you should check out the 2 hour, but I'm just going to jump to the 30 to say Thursday of, not last week, but the week before, when we kind of called that bottom in the market, when we got this first tap of this all-time high, previous all-time high, after selling off all year, we got a nice push, right, on Friday. And then Monday and Tuesday, we were following the trend line from the lows. We're at these moving averages, which again are 30-minute. On Wednesday, we saw that 4-hour candle get through its moving averages and then reject during the cash session. Well, to get a 4-hour chart to do that, it's a cascade effect that starts on lower time frames. Looking at that Wednesday, come on. Sorry. All right, we're looking at the Wednesday where the sell-off of the week started. Looking at that Wednesday where the 4-hour got through, came back to test in the first 4-hour candle cash session, then rejected. Same on a 30-minute. We were rejecting. So this pattern held true on a 30-minute up to a 4-hour. Well, let's just keep going down. Let's look at a 5-minute. 5-minute. Rejection. Not getting through. Sometimes it can be as simple as putting some key moving averages. I love the 9 and the 21. And then walking it down these different time frames. And even with pre-market action, you can start to gauge sentiment on the day. I know we all come from different schools of how we've been taught, how to trade. Even plenty of us are self-taught, right? And we talk about all the time when you join predicted trades, and you're learning the beast system, which is going to give you a great cutting edge in all of your options trading. Don't throw out all of your foundational training out the window. It all still applies to the market, to price action, and everything. And beast is just going to help show you the best time to allocate risk on an option, and you should use that in conjunction with your overall thesis, right? If it's looking like this pre-market, you need something like a key level to push it above, change those moving averages over, and then use it as use the moving averages to move on up, right? Just like we use them to move down, we got to use them to move up. This is also what I use sometimes to gauge entry. When something falls all day and then around noon tries to get going, it has to get above these things and stay above them. So you let it get above, and once it breaks back below, you take entry on that short, and it falls, gives another little test, another, yep. So just some key examples of how these moving averages can help us. On Friday, hey, we got above for a little bit, back below, and a rejection. So even if you miss the long, and even if you miss the short, once it settles, and tests the moving averages, enter, down, right? So just a couple of key little things to check out. Simple as the 9 exponential moving average and the 21 on a bunch of different charts. On a 30-minute, we got above. The second it starts breaking back below, especially that open level and the moving averages, you should be going short. You catch the rest of this candle to a key level and lock up. It bounces back and closes. It rejects again, and you get back in to the next key level and you lock up, right? And if we walk back out again to a 4-hour and look on Friday, it opened and could not get to the 21. Stopped about halfway. But if we check a 2-hour, that's where it tapped and rejected. So it's a cascading effect, right? Didn't get to the 4-hour, it got to the 2-hour and rejected, and that tiny little wick, that, let's see, 40.5 to 40.70, that 20-cent reach over and rejection was all you needed to enter a short, right? Just giving you some things to go off of. It'll have a cascading effect. You can watch it multiple time frames and see these things happen. The 2-hour rejects, the 30-minute falls under, the 5-minute falls under, yada, yada, yada. So, let's keep an eye on these things as we move into this week. On a 2-hour, we're back above. Let's step out a little more. On a 4-hour, like clockwork. Sheesh. On the 4-hour, we got up to the 21, and we pulled back to the 8. Very key right now. For upside tomorrow, we gotta, hold the gap, maybe fill the gap, but we gotta get off of this 8, back above the 21 to really keep going. If you've never dealt with moving averages in this way, we'll come out with some more lessons to kind of help you guys. But the gap, when they're wide like this is called vacuum. When you get to a moving average, you can vacuum through to the next, back through, vacuum again. It's a lot of liquidity just changing hands saying, okay, we're pretty happy with staying here and going up, or using this as a rejection to go back down. So just a couple of, key lessons with moving averages, different time frames. These are all tools to help you gauge direction, momentum, continuation, time. I mean, these things only stay apart for so long, and you can only push against them and not reject before they come together, flip, turn into support. And even like here, this, when we got down, closed, tried to get out and couldn't, right back through. So let's just look at some other names. ES on a 30-minute, back above, looking strong. This 30-minute 21 starting to just kind of set a trend line that could carry us through to open. Oh, sorry. No, yeah, we're on ES. Let me... This. There we go. Now we're on Apple. So we'll see what Apple opens, but if we can hold the gap up overnight, which it's kind of starting to slip back a little bit, but we should see a little bit of a gap up back into this zone. Like I said, want to see it turn into support so we can keep pushing off of it. You know, we have some obvious upside targets, but 145 pretty key to get back to 144-ish. You know, we got last week in trying to move up off that Thursday, Friday low. It was a good base that we kept testing and bouncing and testing and bouncing. And then once it gave out, boom, further down. Just like the prior week when we were above 150 and kept bouncing. The second 150 gave out. Down, down, you know. So let's see if this can turn into support, take us higher. Let's move on to Amazon, because that's another big key name, especially with the stock split coming. Let's go to a 2-hour. And let's look. So as I look around at this 2-hour chart, I just noticed a cluster of candles that wicked, closed, and kind of reversed right at. And even in all that selling last week on Amazon, it did not revisit the prior Thursday's low. It held above something that it basically pulled to a stop at, pushed back through, used as support, used as support, used as support. So, you know, we've got a nice floor right now on Amazon. We didn't make any H's. You know, ES did. It set a new low of year, right? Made that H back up. NQ, same thing. Apple, yeah, made that H, but back up. Amazon. Hold. Looking pretty interesting. I know watch is starting to drool over there. So, I definitely like Amazon. Let's look at that 4-hour with the moving averages. Yeah, right back at them. And a little gap up. Could maybe even get them to flip pre-market. So Amazon's setting up nice, even on the 4 hours, to get back above the means. And if we go to the dailies, yeah, the rejection of the 8 held the base, and a little gap up could get us right back at that 8. And then we could see in a one given day, maybe we'll call it 2 given days just for how far apart these are. We can see that vacuum. If we get above this 8 on the daily, we could see a day or two where it just vacuums straight to the 21. Maybe settles, gets them close to flipping for a potential run-up into this split that's coming. She's going to have to push. She's probably going to pull back. She's got to keep pushing. We only have, 9 days. Because we have a holiday, right? So, only so much time. And frankly, this week is pivotal if it's going to be a move to try to get back to potentially, let's say, a gap fill above. I mean, can Amazon run to like an all-time high before the split? Shit. I've seen crazier things happen. It'd be a lot of money coming in, but it's absolutely possible. Sorry, just marking this gap. Because that is the first target if we're trying to push up and get back to something like above 3,000, right? So, definitely going to be keeping an eye on Amazon. Definitely going to be watching this interaction with the 8 and the 21 and this high. If we can get above this 8 and push off of it, take out this high, straight vacuum to the 21. Pull back for support, get back to this. Consolidate under it, blast through it. I can envision something before we get to the split. They could do it for no other damn reason than to get the market back up to a better spot to keep going lower off of, right? So, anyway, gonna keep an eye on Amazon. One of those names that was green on Friday. We'll do a quick step down through the time frames. Why? Because 4 hour to vacuum through would just be getting above 2180. Not hard. It could be there by morning. On that daily, that 21 sits way up at 2400. Versus the 4 hour, it sits at 2180. 2400 up here. So we can get a good idea if they want to change trend just by getting above 2180. 2180 could and 2200 could propel us straight through the 23 in this 2316, propelling us to the 24, which is was it the daily 21 or the daily 8? Whew. No, daily 21. Back to the mean. Let's go to a 2 hour. 21, let's say 70, gets us above the 2 hour. Remember, cascade effect. If we get above 2170, we're above the 2 hour mean. If we can get above 2180, we're above the 4 hour mean. 2200 through recent highs, we can vacuum straight through. There's a lot of different ways that vacuum gets used, especially with EMAs. But another thing to consider as well, you can look at this on a 2 hour, 4 hour, whatever. We were moving higher and then straight down. Sometimes when you break through these highs, since it was such a straight move, you can get straight back up. So, breaking above that 2160, that 2180, and these highs, and using them for support can make it skyrocket right through this back to where we were, right? Like, let me give you an example. Let's look at ES on a 4 hour and where it sold off on Friday. Sold off from here on Friday, and we're right back at it, right? So, just an example. Let's move on to Facebook. 4 hour. Down hard on those earnings, right? Then, nice gap up on that earnings. Holding gap, right? And I have not a ton of levels in between here. Why? We've talked about this. If we can get above these levels and hold them and push off of them, a couple of highs to take out, and we can vacuum straight up to that big key level that we need to get back to. You know, taking out that high with such a hard down move can be a hard move up. So, there's a wedge here. Before I even zoom in or anything, I can see it out of the corner of my eye. Draw your wedge. You've got support. We've got a gap holding us up. We get through the downtrend. We take out recent highs. Facebook can march higher. Look at this floor. So, I'm saying, like, look right at my cursor. You can see a nice floor has been set and set and set and set. And yes, we slip below it. Sell off into earnings to just gap right back up and keep going. So there's some good setups taking place here in the market. I guess I didn't really move around on different time frames there. Oh, what are we on? 4 hour. Getting above this 195, above that 21. Let's go to the daily. Getting back above 205, back above the 21 on the daily. Let's just look at a 30 minute. Already above. So, I'm just keeping on this topic of using moving averages to help us gauge change and trend. And if we're setting up something nice here. Netflix, let's start big and we'll go small. Whew! Forgot how big that gap was. Draw your gaps. Oh, you punk. 5. Yeah, this is working real well. There we go. If we can get back above that, let's see, the 21's right near that recent high. It's funny how these things pull down long enough for it to arrive at recent highs, so that a push through that is the same as through this, and we can start a trek higher. I hate playing Netflix after a gap down on earnings. It's usually don't touch it for a while, but they bought it, you know? One of the big players in FANG got bought on Friday, and ES and NQ were almost, maybe NQ was positive, I can't remember, but not loving this setup as much, but going to keep an eye on it, because a quick pop to 205 gets us to the daily 21. We could get back to this gap fill pretty quick. This gap fill could be a fun, that's a lot of ground to cover. That would be a few day journey for Netflix. But out of this whole group, if you had to get rid of one, maybe get rid of this one. But overall, it'll be interesting to see if they keep buying it. But that Amazon, Apple, and Facebook, I'm loving those. This gap just makes this chart annoying, so I'm not going to look at it so hard. Ugh, Tesla. This chart needs cleaning up. Tesla. I'm just covering it. Not that it's a great setup. Not that it was green on Friday. You'll notice a gap in some of my levels here on this particular chart. Mainly the 667, sorry, is kind of key. We're probably going to get back above it on a gap. Looking for this to hold. And if market's going to move up on all those other names, Tesla's got some of the gaps up above, right? Tesla's got some interesting stuff, price action wise, that I find intriguing. So if it can get back and hold this, I would be very interested to see what's going on here. Um, who else? Shop should be also watched. There are some gaps here that are not on this drawing set, but we've got some gaps that are above if Amazon's going to move up for that split. Shop also has a split. It will get pulled up on sympathy, probably take a break for a week so that everyone thinks it's time to short shop again, and then move higher. So both of these ecoms have gaps above, have splits coming, and at least Amazon, you got some love on Friday. So those are kind of some of the key setups I'm going to be looking at. VIX is the last thing I'm going to cover on this prep, and then I'm going to wrap it up. Same thing with moving averages on VIX. On those up days, Friday, Monday, Tuesday, VIX rejecting on a 30-minute even, these moving averages. Wednesday, above, support, even before open, you know, back below, back above. So let's see if moving into Monday, we can stay below the moving averages, get back below this zone around 29, and have those moving averages push us down. Last time this happened would have been like last Monday, right? We could be below the moving averages and pushing off of them to get through this zone, just like last Monday, this Monday. So that's all I was going to cover in prep tonight. A little discussion about moving averages, a little discussion about multiple time frames, and just a simple idea of what did they buy on Friday? What did they rotate into? Wasn't CAT, wasn't BA. YM didn't get a ton of love on Friday. I'm not sure that it closed green. It was definitely got pulled down hard. But ES did close green. So, and now we're getting a gap up. So hopefully this prep was helpful to everybody. As always, I'll see you guys in chat. Good luck tomorrow. All the data will be updated here shortly. No beast, no feast. Let's have a good week.